Bitcoin at 100,000. What relationship does this have to other assets, such as stocks? Because on the one hand, maybe it competes with them, but I know your team's been writing about a virtuous feedback loop between Bitcoin and, for example, the Nasdaq.
Well, I think the first thing to say is that today was interesting because there wasn't an obvious impact in other markets. At the time, we were thinking Bitcoin hits 100K and other markets shrug. There was really not much of a reaction. And generally in the past, we have seen a much stronger positive correlation of when there's enthusiastic risk sentiment out there. We see stocks doing well. It's when crypto also does well. There's a general theory that, look, there's enough people who own crypto. I think I read that Bitcoin had added $1.3 trillion in market cap over the last couple of months alone, which shows that that's wealth that's gone into people's pockets, and they don't spend it all back into crypto. I know that there's a ethos of holding your crypto and just piling more money into it, but they do spend more money, they do pile more money into other assets, and it's good for the stock market, it's good for the economy. It's a wealth effect just like anything else.
Yeah, it certainly had a big effect last time we saw these kinds of numbers in terms of the luxury trade, so that's maybe one read across. Presumably, though, Mark, this is a giant liquidity suck. So where's the money coming from that has generated this move?
I'm not sure if it's that much of a liquidity suck. It sounds like very big numbers, but remember, you've got, $6 trillion in money markets. You've got a lot of liquidity out there. The four biggest central banks in the world, still have cumulative balance sheets. I think it's about 30 trillion at the moment. There's a lot of money awash there, and that's not including leverage. And of course, a lot of the money that goes into crypto can be on leverage as well. So it's also important to emphasize that much of these gains can be paper, particularly in the non-Bitcoin cryptos, which have surged a lot since the election as well. You might have very small turnover, which is turning over at a few price, which implies that really billions have poured into an asset where there's only been maybe a small amount of money that's bought a token at a high price, and that sets the whole market cap. So I don't think it's been too much of a liquidity suck, but you're right. It's a partial liquidity suck, but every asset's going up. The world's feeling wealthy at the moment. Growth is still going strong. At the moment, we're still on the positive treadmill.
Yeah, new records on US stocks, for example, Mark. Now, if you looked at the bond spreads in Europe today, the French spread over bonds, you wouldn't believe that the government had been voted out after hours last night, would you, perhaps? But I suppose this has had a big build-up. What strikes you as interesting in the way that this is being traded, Mark?
So I think, first of all, Ven Ram on the team has argued a lot in the last couple of days that this is about the peak of French stress in the short term. And I think that the folding the government is not necessarily a bad outcome. Macron can impose austerity, stay the leader. He might be playing a bit of a blind to the long game, that it undermines the opposition. But I think in longer term, it does not increase enthusiasm for French assets or European assets, and that's not good.